Ladies and gentlemen, thank you for the opportunity to present the E1 Diesel Floating Storage Unit project. This project is designed as a strategic offshore diesel storage and trading infrastructure platform located in the Batam Free Trade Zone, Indonesia, directly adjacent to the Singapore Maritime Corridor. Through this presentation, we would like to introduce a scalable offshore energy infrastructure opportunity structured for strategic JV partners and financial institutions seeking strong asset-backed returns, recurring USD cash flow, and long-term infrastructure value creation. The E1 FSU project is centered around a 300,000 metric tons VLCC-based floating storage unit strategically positioned to support growing regional diesel demand across Southeast Asia. Unlike conventional passive storage facilities, this project utilizes a dual STS high-throughput operating model designed to maximize cargo rotation, throughput monetization, and trading margins. Combined with a low CapEx structure and hard asset backing, the project is structured to deliver attractive risk-adjusted returns with scalable long-term upside potential. Today, ASEAN continues to experience strong diesel demand growth driven by industrial expansion, marine transportation, power generation, and regional trade activity. At the same time, strategic storage capacity remains limited, while Singapore continues to face congestion and infrastructure constraints. This market environment creates a significant opportunity for a strategically positioned offshore diesel logistics hub capable of supporting regional storage, fuel redistribution, cargo optimization, and trading arbitrage activities. One of the project's strongest advantages is its location within the Batam Free Trade Zone. Batam sits directly beside Singapore and along one of the busiest maritime shipping lanes in the world, providing direct access to major tanker routes, Indonesian domestic fuel demand, and regional ASEAN markets. In addition, the FTZ framework provides operational and commercial flexibility that supports efficient offshore fuel logistics and cross-border trading activities. The long-term market fundamentals supporting this project remain highly attractive. Indonesia is one of the largest diesel-consuming markets in Southeast Asia, while marine fuel demand and regional fuel movement continue to expand. Increasing cross-border trade flows and re-export activities are also driving stronger demand for flexible offshore storage and logistics infrastructure positioned near strategic shipping corridors. The E1 FSU project itself is designed as an integrated offshore diesel storage and trading hub combining a VLCC-based FSU, dual STS operations, mother vessel transfers, and regional distribution tanker support. This integrated offshore structure enables efficient fuel handling, cargo rotation, storage optimization, and logistics flexibility while maintaining scalability for future regional expansion. The dual STS high-throughput model is one of the key differentiators of this project. Rather than operating as a passive storage facility, the E1 FSU functions as an active offshore logistics and trading platform capable of generating multiple layers of revenue. Through continuous cargo rotation and simultaneous transfer capability, the project creates monetization opportunities through storage fees, throughput fees, STS services, blending activities, and trading margins. As a result, the project benefits from diversified revenue streams that enhance both profitability and resilience. Stable recurring revenues are generated through storage, throughput, and STS activities, while additional upside is created through cargo optimization, blending margins, and trading opportunities. This creates a balanced cash flow structure combining operational stability with scalable commercial upside. Compared to conventional onshore terminals, the E1 FSU model offers a significantly more efficient investment structure. Traditional terminals require heavy upfront CapEx, lengthy construction periods, and often rely primarily on fixed storage income. In contrast, the E1 FSU structure utilizes lower CapEx, faster deployment, higher throughput monetization, and multiple recurring revenue layers, creating the potential for substantially stronger equity returns and shorter payback periods. Another important advantage is the existence of the VLCC marine asset itself as underlying collateral. This creates a more financeable project structure by combining recurring operational cash flow with tangible hard asset support. For lenders and financial institutions, the asset-backed nature of the project enhances financing confidence, supports stronger leverage capability, and reduces overall project risk exposure. The project has also been intentionally structured as a low-capex offshore infrastructure model. Under the proposed structure, the vessel partner contributes the marine asset while the conversion process can largely be structured as lease or operational expenditure rather than heavy upfront sponsor capex. This minimizes initial sponsor equity requirements, preserves liquidity, and aligns project costs more closely with operational cash flow generation. The proposed JV structure is designed to combine the complementary strengths of both strategic partners. The vessel owner contributes the VLCC asset, supports the conversion process, and leads financing coordination, while PT Petro TNC International manages project execution, operations and maintenance, commercialization, and trading coordination. This creates a balanced and aligned partnership structure focused on long-term infrastructure value creation. For vessel owners, this structure creates a compelling opportunity to transform existing or aging VLCC assets into long-term income-generating offshore infrastructure. Rather than facing declining utilization or low-value scrapping economics, vessel owners can monetize their assets through stable, recurring USD-denominated income, long-term deployment, and participation in a scalable regional energy logistics platform. From a financing perspective, the project is structured primarily around operational liquidity and working capital financing rather than large project capex financing. Since the underlying asset already exists and the structure is asset-backed, financing requirements become significantly more manageable and operationally focused. This creates lower risk, easier bankability, and stronger lender confidence. Financially, the project is designed to deliver highly attractive economics through high throughput utilization, recurring USD cash flow, and multiple monetization layers. Indicative projections show the potential for equity IRR exceeding 50%, EBITDA margins between 40% and 65%, and estimated payback periods of approximately 2.5 to 4 years. Combined with throughput scalability and trading upside, the project offers a compelling long-term infrastructure return profile. To ensure strong alignment between both parties, the indicative early-stage profit distribution structure allocates 70% of project profits to the JV partner and 30% to PT Petro TNC International. This structure recognizes the vessel owner's contribution of strategic assets and financing capability while maintaining long-term operational alignment and shared growth incentives. Importantly, the E1 FSU project is not intended to remain a single-asset business. It is designed as the foundation of a broader regional offshore fuel logistics platform. Future expansion opportunities include additional FSUs, bunker hub development, LNG support infrastructure, and integrated regional fuel logistics activities across Southeast Asia. Over time, this creates the potential for substantial infrastructure platform valuation beyond a single marine asset. The timing for this project is also highly strategic. Regional diesel demand continues to grow, Batham's location is becoming increasingly valuable, offshore storage capacity remains limited, and many aging VLCC assets are seeking alternative utilization opportunities. At the same time, the regional energy transition continues to support demand for efficient fuel logistics infrastructure, creating a strong long-term market environment for this type of platform. As an immediate next step, we propose initiating a structured JV discussion focused on validating the commercial and technical framework of the project. Initial activities would include vessel review, technical assessment, commercial structuring, financing alignment, and preparation of an indicative term sheet. The objective is to establish a clear partnership pathway that allows both parties to move efficiently from concept development toward execution. In closing, the E1 FSU project represents an opportunity to transform existing marine assets into high-yield offshore energy infrastructure supported by strategic location advantages, recurring USD-denominated cash flow, scalable logistics capability, and strong financing fundamentals. By combining hard asset backing, high-throughput monetization, and integrated offshore fuel logistics operations, we believe this project can deliver sustainable long-term value creation for both strategic partners and financial institutions. Thank you for your time, attention, and interest in the E1 Diesel Floating Storage Unit (FSU) project. We believe this project represents a strategic and scalable opportunity to participate in the growing regional energy logistics sector, supported by Indonesia's favorable maritime position and increasing diesel demand across Asia. We look forward to building a strong and mutually beneficial partnership with our prospective joint venture partners and financial institutions to realize this project successfully and sustainably.